The fundamentals of Bitcoin. Should you buy it? Hi, welcome to the InvestorBot channel, where we look at potential investments from a first principle point of view. Today we will take a look at the first principles of Bitcoin as an investment. Some questions that will be answered are: what is Bitcoin? What are Bitcoin's weaknesses? What are Bitcoin's strengths? How do we value Bitcoin? What are the biggest risks when investing in Bitcoin? We will begin with, what is Bitcoin? Bitcoin is the first cryptocurrency to be created. It is a digital currency that is protected by cryptography, therefore it is called a cryptocurrency. It was created in 2008 by an unknown person or group of people under the pseudonym Satoshi Nakamoto. Very simply put, it is a safe and decentralized ledger that can accurately track ownership of Bitcoin for each user. It is different from other decentralized networks before it because its ledger is very safe, so safe that even when Bitcoin's total value broke $1 trillion, the ledger allocations were not altered through hacks. What are Bitcoin's weaknesses? Because Bitcoin was the first cryptocurrency, its technology is now old and relatively simple. Since its invention, very many talented people have been working on making more cryptocurrencies and improving the underlying technology. In many cases, new currencies were sold before the technology was completed in an initial coin offering. Then the money raised was spent to design and build the new cryptocurrency. In many cases, newer cryptocurrencies provide improvements in the underlying technology. The most famous cryptocurrency besides Bitcoin is Ethereum, which had its initial coin offering in 2014. This cryptocurrency allows users to create smart contracts. These contracts provide a digital foolproof way of conducting business with no way of getting out of your contractual obligations. The most important challenge for all new and old cryptocurrencies is the crypto trilemma. When designing a cryptocurrency, the designer usually must pick 2 out of 3 desirable traits. These traits are decentralization, scalability, and security. Decentralization is the advantage of cryptocurrencies over traditional banks. Because no single entity controls the cryptocurrency utility, it is cheap and free from risks related to the centralized entity such as bankruptcy. Security and scalability allow a network to be used by the masses and are important for any financial service. In the case of Bitcoin, the cryptocurrency does not provide good scalability. To allow supply and demand for Bitcoin transactions to meet, a transaction fee must be paid. This fee has peaked at $60 but is usually less than $10. In addition, Bitcoin does not have additional features, like smart contracts or oracles, that other cryptocurrencies provide. Given its enormous success, there are many efforts to add these functionalities without altering Bitcoin itself. In that case, new functionalities are added on top of the current network. Such an addition is called a Layer 2 solution. The most famous addition to Bitcoin is the Lightning Network. The Lightning Network would allow transferring Bitcoin between its users in a scalable way. However, it is not as safe. If a Layer 2 solution loses funds, the Layer 1 network would still accurately track ownership, but the Layer 1 ownership would have been transferred to an attacker in the Layer 2 system. To make use of a Layer 2 system, it must have access to the account details of the Bitcoin in Layer 1 to be transferred, including the password. What are Bitcoin's strengths? Bitcoin is a very, very safe cryptocurrency. To attack Bitcoin, an attacker needs to control the majority of the computational power behind the network, or identify a weakness in the script. The Bitcoin network has become a significant user of the electricity produced in the world, and also uses large amounts of very expensive computer chips purpose-built for the Bitcoin network. Controlling the majority of the computational power at Bitcoin's current size is almost impossible. Any effort to control so much electricity in computer chips by a single entity would most likely be detected and require extremely large investments, making it an unattractive endeavor for thieves wanting to steal Bitcoin. Furthermore, given the high value of Bitcoin, identifying any weakness in the script would have been rewarded handsomely. The market cap of Bitcoin peaked at $1.3 trillion in November 2021. However, in its history some improvements have been made to the Bitcoin script. On numerous occasions the script was improved to allow better scalability. On rare occasions, weaknesses were removed from the script. Interestingly, whenever Bitcoin was changed, the cryptocurrency was split into two versions. The old version always remained in existence. Therefore, there are now many Bitcoin cryptocurrencies, but only one is highly valuable due to the majority of users picking the most updated version of the network. How do we value Bitcoin? When valuing a new technology, it is usually compared to an existing alternative. In some cases, like internet companies when they emerged, the lack of existing alternatives leads to temporary over- or underestimation of value. For Bitcoin, the best comparison is gold. Gold is a useful metal for all kinds of purposes, but this usefulness does not drive its price. Instead, the price of gold is extremely inflated. Only 8% of gold mined each year is used for technology, the rest is used for investments or jewelry. Furthermore, a $12.5 trillion worth stockpile of gold is held in storage. The reason for all these investments in gold or gold jewelry is that gold is a very safe store of value. This is because the gold supply is difficult to increase. The gold mining industry has a yearly revenue of about $200 billion paid for by the investors holding $12.5 trillion in gold. This equates to about a 2% loss per year. Furthermore, gold has historically been established as a store of value. For thousands of years people have traded gold for useful goods and services. In addition, gold can easily be shaped and used in transactions. Finally, gold is very stable. Almost all gold ever mined is still stored somewhere since it is unreactive and easy to purify from contaminants. Famous examples of lost gold were sunken ships transporting gold bars. Even these bars are being recovered using modern technological advancements. When Bitcoin is compared to gold, there are some big differences. First of all, Bitcoin is digital. It can only be used in a world with many active computers. Furthermore, the historic establishment of Bitcoin as a store of value is much shorter. It was only invented 14 years ago. But with these limitations also come several big advantages. Bitcoin can be used much more easily, since it can be transferred via the internet. Bitcoin can be sent around the globe with the click of a button. Furthermore, the Bitcoin supply is far more stable since the rate of new Bitcoin creation was locked in the original script. The rate of new Bitcoin creation is halved every 4 years and eventually no new Bitcoin will be created at all. Finally, Bitcoin can be stored more practically. If one would want, $1 billion worth of Bitcoin could even be stored using a simple piece of paper with your account information. What are the biggest risks when investing in Bitcoin? The biggest risks when investing in Bitcoin are tied into the technology behind it. First of all, a competing cryptocurrency may over time win favor over Bitcoin if its underlying technology is sufficiently superior. In many ways, superior versions of Bitcoin already exist. However, new competitors struggle against Bitcoin's network size and track record. Cryptocurrencies like Bitcoin become safer with time and size. Furthermore, all of crypto may lose value in certain catastrophic scenarios. The most extreme would be an era without computers. In such a case, gold would be superior and Bitcoin would be worthless. Another scenario would be the sudden advent of affordable quantum computers. These could theoretically break the encryption behind cryptocurrencies. Of note, such encryption is also very important for traditional banking, so such an event may cause more generalized problems. Finally, Bitcoin's establishment as a store of value dates back very little time compared to gold. It may fall out of favor if public perception of its value is disrupted. The value of gold and silver dates back thousands of years and is ingrained in many cultures across the world. In contrast, Bitcoin is treated with suspicion and distrust by many people in power. One of the more likely scenarios which may trigger a change in the public perception of the value of Bitcoin could be if major countries like the United States ban the use of Bitcoin. Of note, historically many investors in Bitcoin have lost their investments to middlemen. When buying anything, whether it is gold, Bitcoin or stocks, usually investors rely on brokers or exchanges to simplify the investing process. Indeed, it is very difficult to find a seller interested in making a transaction with you without any help. However, sometimes the middleman can lose your Bitcoin due to bad intent or bad luck. And since cryptocurrencies are largely unregulated, many scams or accidents have occurred. Therefore, the middleman risk is an additional risk when investing in Bitcoin, even though it is not directly related to the investment itself. Overall, Bitcoin is a new and exciting technology with unique traits that give it an advantage over gold as a store of value. However, there are also many risks facing the value of Bitcoin as an asset, most rooted in the underlying technology behind Bitcoin or the perception of Bitcoin. When comparing Bitcoin's value to gold, it has a large addressable market to grow into. If the risks do not interfere, it could be an exceptionally profitable investment. The combination of large potential profits and difficult to quantify risks makes Bitcoin a moonshot investment. Thank you for listening to the InvestorBot channel. If you would like more videos like this one, please like, subscribe and share this video.